Hey everyone, and welcome back to another episode of Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. Without further ado, we're just going to jump right into things. So we had a nice bullish update regarding one of our Bitcoin miners that we've been following for a while now. That's Cypher Mining. So I'm going to dive into the AI and the hybrid Bitcoin miners today. So that's ones that have kind of diversified out of the core revenue stream of Bitcoin mining and expanded into AI or HPC. So that's high performance computing or AI computing. We've seen a massive grow in demand for AI compute services. So a lot of these miners kind of capitalizing on that, garnishing some premium on their stock. So I just want you to take a listen to this video here. This is just an analyst from Cantor Fitzgerald. He really outlines kind of the bullish case scenario for the AI hybrid miners. So we'll just give this a listen and I will be right back.
Angle here. What is the power need that you foresee? Because we're hearing reports that to power something that could have a million GPUs, do you have to get nuclear involved? Does Texas have the capability for that?
The issue with nuclear over the short term, it takes a while, right? There's a couple companies out there that I don't cover that are maybe 10 years out, but you've seen what Microsoft is doing with 3 Mile Island, even that's 5 years out. This project is going to spend $500 billion over the next 5 years. You're not going to get nuclear before that. So the question is, where do you get the power that you're going to spend $500 billion on? If you kind of run the math on AI data centers, it's $12 million a megawatt of just capex to build it, and that does include the GPUs, which is looking at Blackwell today, somewhere around $30 million
Wow.
A megawatt. So $500,000, you're going to need anywhere from 12 to 14 gigawatts. And that's the crux of the issue, right? You can spend all this money on GPUs, but if you look at the data center industry in the US, it's only 21 gigawatts, and that's what's been built over 25 years. And of those 21 gigawatts of data center capacity, the power density on those racks is maybe less than 20 kilowatts.
Okay.
And that's the crux of the issue is Blackwells need 60 kilowatts, if not more. So you can't use legacy data centers. So all that power you can't use, so you need 12 to 14 gigawatts of new power.
So
and that's where the miners come in, right? They
exactly. And I'm curious if you can kind of rattle off a bunch of publicly traded names, whether they're the miners or elsewhere in your coverage space, you see moving today or potentially being direct beneficiaries.
Yeah, I think if you look at this project, they want power at scale, and that's what the miners have done very well, is connect to the grid. One is Riot. Riot has a gigawatt site in Corsicana. It's about an hour from Dallas. Starboard recently took a stake, wanting them to push into AI. They came out yesterday, said, we're going to stop our Bitcoin mining development and evaluate this opportunity. And that's one that we really like off the back of it, is because we don't think any AI optionality is priced into those shares. And then if you look at Iron, another Texas-based miner, they have a 1.4 gigawatt site going to be energized in April of next year. That is arguably going to be the biggest site, single site from a pure power perspective. And when you're looking at this project, like where they can get the power, those are two areas where they can get the power. And from the mining perspective, it's very advantageous for them to go in this market, because institutional investors, what they're going to pay for a Bitcoin mining business on a profit multiple basis versus a data center REIT type of multiple is night and day difference.
All right, so just coming back here, we'll just talk a little bit just about what we just heard there. So obviously, Cantor Fitzgerald, analyst, talking about kind of the growing demand for this infrastructure. I'll also talk about this when I talk about the pros and cons of the hybrid miners. So we did touch on the legacy data center problem. So a lot of these older data centers that are developed right now, they're actually not technologically set up to be able to host such advanced AI compute or HPC compute infrastructure. So we're actually seeing the need for kind of newer data centers to be developed, in specific a lot of the tier 3 data centers. So again, these legacy data centers are not able to actually they're not able to provide the services that the AI scalers need. So that's where the Bitcoin miners come in. So Bitcoin miners have been developing these data centers for years now. So they kind of have a multi-year head start in terms of construction, as well as they have that optionality to kind of tailor each site as they see fit. So obviously some of these construction buildouts aren't done yet. So if an AI hyperscaler can come in, secure the deal for that energy capacity, and then really tailor the infrastructure exactly how they want, it really gives a lot of flexibility to these AI hyperscalers. And at the valuations that Bitcoin miners are currently at, it's just kind of a no-brainer. You obviously see Brett here just talking about that as well, how some of the miners have such massive amounts of energy. So Riot was one he mentioned, as well as Iris Energy. Those are two I frequently follow too. I'm going to talk about in this comparison here. But the major news of the day today is Cypher Mining announcing a 50 million PIPE investment from SoftBank Group. So SoftBank to purchase approximately 10.4 million shares of Cypher common stock for 50 million, and then the 50 million PIPE investment will support Cypher's HPC data center development business and establish SoftBank as a significant primary investor in Cypher. So interesting to see, yeah, just an initial 50 million investment right here. So we'll see kind of how far that goes. It's probably only, you're probably only going to be able to develop maybe 25 to 50 megawatts max kind of thing if they're able to utilize the funds really effectively. But that being said, it doesn't stop them from taking additional stake in Cypher and kind of increasing that pipe investment. The main thing that I wanted to allude to right here is kind of the pseudo partnership with some major player here. So obviously we see SoftBank. Recently we did see OpenAI announce a partnership with SoftBank. So OpenAI is going to expand up to $500 billion worth of AI infrastructure within the United States, and SoftBank is the primary funder of that expansion there. So we see here obviously SoftBank partnering with OpenAI to back their data center expansion, and now we see SoftBank investing in Cypher here to support their data center expansion. So if you can kind of extrapolate a little bit, obviously it's not a direct partnership between OpenAI and Cypher, and it's still speculative at this point, but you can kind of see the connections there between the companies. There's a few of these different connections between other companies as well. We'll get into that, kind of touching on some of the bigger AI deals. So we're just going to cover at least the top 3 AI deals in the sector that have been landed so far. So this is obviously one here. Obviously only $50 million, so compared to kind of a TeraWulf and Core Scientific's deal, it's a little bit less, but again, this is just the initial investment, so it'll be interesting to follow this, and maybe we'll see them start to kind of invest more and more in Cypher to try and capture some of that data center capacity. Moving on here, so I've talked about this partnership before, but obviously I want to touch on this because it is the most important and the biggest AI deal that a miner has had so far. So obviously Core Scientific has a new contract with CoreWeave. They're giving them an additional 70 megawatts of infrastructure. So it's a total of 270 megawatts initially. It's supposed to be deployed, I think, by the end of the year is kind of their plans. Basically, this is going to add 1.225 billion and 3.5 billion. So collectively, you're getting about $4.725 billion in revenue spread out over 12 years once this is on a fully deployed basis. So just shy of about $400 million per year in revenue just on AI compute. So really attractive revenues there. Generally speaking, also the AI HPC computes do have higher profit margins than the Bitcoin mining side of things. So lots of good revenue coming in here expected in the future. Obviously, it's going to be very dependent for the next year, kind of how they execute on their deployment schedule. So we want to see, obviously, get these facilities up and running as soon as possible. But obviously, there is extensive timelines. They do kind of have to decommission their Bitcoin mining rigs, make room for the new infrastructure, and then tailor that infrastructure how they want it for the actual GPUs. We do see here, obviously, the world is changing. Many data centers built in the last 20 years are not able to support future computing requirements. That's what Brett on Cantor Fitzgerald referenced here. So yeah, just interesting to note that Core Scientific also just recognizes that the legacy data centers are not able to provide the necessary services that these companies are looking for, and then that's where the Bitcoin miners step in. So we see obviously providing approximately 270 megawatts of HPC by the second half of 2025. So I'm just a little curious about this wording. I don't know if they meant before Q2 2025, so like by the end of the first half, or if they mean by the end of the second half of 2025. But it kind of sounds like by the second half, so I'm leaning towards hopefully deployed by the first half of 2025 and then operational for the second half. And then we're able to actually kind of realize some of those revenues. But we do see there is optionality for further expansion with an additional 230 megawatts. So it'd be a total of 500 megawatts for HPC hosting. But that being said, Core Scientific also does have a total pipeline of 1.2 gigawatts of contracted power. I'm sure if it made financial sense to keep decommissioning Bitcoin mining rigs in place for AI compute, if you get the right deals, then I'm sure they'll go about that way as well. Another interesting thing to note with this deal here, CoreWeave actually funded the entire cost of transitioning the equipment, so that's kind of a big thing. It's really good for Core, so hopefully we kind of see that with other miners as well. Some of the AI hyperscalers just having to foot these costs to transition the equipment, just because miners trade at such a discount to relative data center valuations. So just moving on again, so we talked about TeraWulf as well. This is another one of the larger AI deals so far. It's still only 70 megawatts. So you think of some of these Bitcoin miners, when they have a gigawatt or more of infrastructure, then it's really not that much. In CoreWeave's sense, even fully exercised at the 500 megawatts, that's still about 40% of their overall capacity. But yeah, it's just interesting to see. I'm sure it'll keep scaling up as they kind of exercise their optionalities on these contracts as well. But again, 70 megawatts to G42's U.S. operations. So this is another one of those kind of pseudo partnerships. So obviously, they're essentially providing these to Core 42. So Core 42 is a subsidiary of G42, and G42 is partnered with MGX, and then MGX is partnered with OpenAI. So we do see, again, there's kind of those connections between all these companies where we might actually see, TeraWulf and TeraWulf and Cypher kind of providing some of the compute power for that OpenAI Stargate project. Again, they're going to need probably, I think he said 15 gigawatts just for that project alone. So yeah, definitely will need to kind of acquire a lot and secure a lot of data center infrastructure. And we do have the connections between some of the companies here to just recognize there is that potential. If that did become an official announcement, these stocks are going to pump. I'll show you right here. Actually, Cypher's just going nuts today. Up 25%. Obviously, the other miners are down, but you see we dumped here. So this was that AI news that DeepSeek came out and just blew all the American tech companies out of the water. The market dumped out super irrationally because it didn't change anything in terms of data center demand. All it really did was kind of really affect the valuations of these companies that are focusing on the actual models, so the AI modeling. That being said, Cypher on this news has recovered from this low. Again, note this low is right in the middle of our Fibonacci golden zone. So we targeted this area as a buy. It filled our entry. And look, we're up right now. We're up 45, almost 43, almost 45%. And to the peak, we were actually up 55%. So in one trading day, or essentially one or two trading sessions, that's a 55% swing in Cypher. And that's what I tell you, these miners are such low market cap that when they start moving, they really pop and they run hard. So just keep that in mind. We do see some of the other AI related ones that I mentioned. So Riot's doing well. I think, again, that's because they have that optionality to maybe divert some of their potential energy to AI. Iris Energy is doing okay. Hut's doing a little bit better there. Core Scientific up. So yeah, obviously all the AI related miners are holding up a little bit better than the pure form Bitcoin miners here. Interesting to note though that HIVE is not catching any bid despite the fact that they actually do have current HPC revenues. So they're just a small scale miner. So we'll talk about them a little bit going forward as well. But yeah, just to show you there kind of the effect that some of the even such a deal as small as this, that's a $50 million deal on a company that's currently trading over a $2 billion market cap. And they moved 25% in this trading day and 40% basically factoring yesterday's extended hours trading. So that really tells you if we can position ourselves in these fundamentally undervalued companies that also have that potential news catalyst or that hype catalyst in the future, we can really kind of position ourselves to take advantage of both the fundamental value as well as the speculative value. So yeah, there's just a couple options there, but we'll kind of move on again. So I want to look at yeah, so I got this document here. I will include the link in the description for you to reference and get a copy if you see fit, or if that's what you want. But we'll just cover it quickly here. Obviously, see the bull case for hybrid AI HPC Bitcoin miners, given the recent surge in demand and competition within the AI compute space, seen a substantial increase in necessary infrastructure to power these services. Despite recent advancements in AI modeling bringing speculation amongst valuations in the space, I still believe there's growing demand for the pick and shovel plays. So data center operators, chips, server manufacturers, that kind of thing. Obviously, we see enter the Bitcoin miners. So they're often highly efficient and fast scaling data center operators with massive amounts of energized infrastructure under management, and as well as large pipelines comprising of tens of gigawatts of potential power at extremely competitive prices. When valuing Bitcoin miners from a traditional data center perspective, they're often priced at a substantial discount to traditional data centers. That's what we talked about, and it's also outlined in this article right here. So I'll flip over to here. Obviously, we see DL News. This is from a report from Bernstein. So these analysts here at Bernstein, miners traded at a 90% discount to AI data centers. They can piggyback off the AI boom, and they trade at a steep discount. They're well positioned to ride the boom of artificial intelligence, 90% discount to traditional data center. The discount might not last. Obviously, with Core Scientific, we've seen their shares rise almost 300% in 2024, far outpacing the rest of the asset class, apart from some of the other hybrid miners. So really seeing as the hybrid miners really start to actually land deals, the premium really kind of starts to show itself on these things. So we've also seen basically anything AI related in the stock market is just pumped to crazy valuations. miners excluded, in my opinion. Like, even at the current valuations of these hybrid miners, I still think they're not being as valued as some of the other AI players. That being said, I think they bring more value to the space. So again, when I talk about all the competition between AI modeling, there's a million different companies building a million different models, but they all need that infrastructure. They all need the data centers. So that's kind of going to be the majority of where I see all, like, there's always a need for that power, and therefore there's always going to be a premium kind of applied to that power. So just following that, obviously, it positions them as attractive partners for AI cloud providers who want to accelerate their time to market. That's because often they basically have ready, cheap access to power, or as I mentioned before, they have that head start in terms of construction, where some of these miners have been building out these data centers for years now, whereas AI hyperscalers, it's just become hot recently, and they're just starting their development now. So those miners have that kind of multi-year advantage in terms of construction. We obviously see here tapping energy from existing Bitcoin mines can cut the time by 75%. So a huge incentive to kind of tap that available energy and get your AI models on ahead of your competition there. We see here, obviously, legacy data centers can be valued anywhere from 30 to 50 million per megawatt. That's a really kind of variable number. I mean, I've read everywhere from 5 million to 30 million to 50 million. So I like to be a little bit more conservative on my estimates, but obviously Bitcoin miners valued at 2 to 4 million per megawatt, according to Bernstein. So even if, let's say, on the low end, let's say 10 million per megawatt, even 5 to 10 million per megawatt, these miners are still going to appreciate, 3 to 5 times what their value is right now if they were to trade at a similar valuation. So we obviously see here the market's underestimating this value of power access and actually penalizing miners for the cyclical volatility of Bitcoin. But that kind of being said, as we continue to see Bitcoin price appreciate, Bitcoin network adoption appreciate, as well as this growing demand for AI, kind of the stuff that used to look bad on the balance sheet, as well as the new FASB accounting standards. So previously, miners weren't able to actually upmark their Bitcoins on their balance sheet, but they had to mark it down as a loss if that was the case, which is kind of ridiculous. So going forward, there's going to be a bunch of Bitcoin mining companies that hold tens of thousands of Bitcoin on their balance sheet, and they're going to be able to actually report the unrealized gains on those. So that's kind of going to add a little catalyst to the earnings, as well as the higher price the Bitcoin goes, the better the miners' or earnings look as well. And then again, just add in that AI hype. So really just bullish advancements across the whole space. Whether you're a pure form miner or a hybrid miner, I think there's a lot of room to grow here. So just flipping back, obviously, to our document here, and obviously, due to this relative undervaluation of assets, so the cheap access to large amounts of power and growing demand is what we started to see AI players securing these deals, capture some of that energy. We're going to go into some of the more promising AI HPC hybrid miners, compare some of these deals, and discuss that bull case surrounding this potential relationship. So kind of obviously what we see here for me, or what constitutes a hybrid miner. So any miner who generates additional revenue or current revenue from AI or HPC computing operations, or has signed a deal to provide meaningful megawatts for AI compute. I also include a couple companies that have just expressed interest. So they don't actually have any current HPC revenues. They don't have any deals signed, but they have the potential and they have the power there to actually land a deal. So I've included those as well. Obviously, right through here, we've got Core Scientific, TerraWolf, Cypher, Bit Digital, Iris Energy, Hive, Hut, Riot, and Bitfarms. So of these, Core Scientific, Wolf, Cypher, and Bit Digital have landed deals essentially, all varying a little bit differently. So Bit Digital, while theirs isn't a single deal, they have a bunch of different contracts here, equating to about $84 million of revenue in 2025. Management has also expressed that they're anticipating actually to exceed $100 million of contracts in 2025. So we'll just follow that going forward. But right now, this is what they have kind of for signed LOIs. And then we see here, obviously, Iris Energy, Hive, Hut, Riot, and Bitfarms are all interested in expanding that AI HPC front. But that being said, they haven't landed or signed any major deal yet. It is interesting to note, obviously, of these, Iris Energy, Hive, and Hut all have current HPC revenues. So Iris Energy has the most here. They make about 16 million last year in HPC. Hive made about 9 million in HPC, and Hut made 13.6 million in HPC. And then below for 2025, we do just have the estimated revenue for 2025. So for cores, their estimated revenue, we're looking at 196.88 million. For Wolf, we're looking at about 50 million. It's just an estimate, so they didn't really give any concrete numbers as to what their deal is going to be valued here. So essentially, I just extrapolated the value from cores here with their additional 70 megawatts, and then used that figure over here, as well as taking in their timeline of energization for Wolf. So they want to have everything up and running by Q1 to Q3. So I just took the average there. I took Q2. So just assuming that they're able to get 70 megawatts online by Q2 with similar revenues to the Core Scientific deal, they're looking at $50 million for the back half of 2025. We see here, obviously, the additional optionality. So if the company, or if the partners want to extend their contracts, they have the option to kind of add further capacity as time goes on, obviously, in Wolf and Cores. Cypher here, again, I don't really have the exact numbers. We're not sure. We just know that it's a $50 million investment. So kind of just roughly gauging here. A lot of miners, it's about $1 million sometimes for them to build out a megawatt of infrastructure. So just looking at this, just at an estimate of 50 megawatts contracted here. So you could also extrapolate that. By the time it's online, obviously, it would kind of probably be about, $35 million worth of revenue, depending when they get it online compared to Wolf. So just similar there, but yeah, we'll just watch this and see if we get more kind of logistics around the deal. Obviously, that additional optionality. And then Bit Digital, 84 million. Iris has set for 33.6 million in HPC revenue this year. Hive's looking at 25 million. They recently just announced a purchase of NVIDIA H100 and H200 chips. So yeah, they'll be looking at about a $25 million run rate this year. And then once their whole fleet is active, then they should be looking and targeting kind of closer to a $35 million annual run rate, assuming the current infrastructure that they have. Hut here estimated 3.4 million for 2025. Yeah, we'll see. They have a major data center build out. I don't think it's supposed to come online until 2026 though, but we'll see if they land a further deal kind of there. And then Riot and Hut both expressed interest, but yeah, no deal landed and no current HPC revenue. So just following that going forward. I'm just scrolling down also. We see here the estimated annual revenue in millions. So this is the initial. And I also kind of just took their deployment schedule in account as well. So obviously $393.75 million annual revenue, kind of once it's fully deployed. So again, not till 2026. Going 2026 and forward, we're looking kind of, yeah, at this. So we see obviously the first contract of that 270 megawatts will provide just shy of $400 million per year on a 12-year basis. And then if they were to exercise that additional 230 megawatts, the total revenue for the whole contract would be looking at about $729 million per year on a 12-year basis. And then obviously for TeraWolf, we're looking at, $100 million per year. If fully exercised and deployed, we're looking at $285 million of HPC revenue per year. And then estimated annual revenue for Cypher, 71 million per year if it's just about 50 megawatts or so. But again, that's just kind of an assumption for now. We'll update that as we see fit, or if we get more deals. So we'll just kind of move on here. So who's next to land a major deal? So my theory around this question ties to a point previously mentioned, how those traditional data centers don't have the capacity or the technological infrastructure to be able to host these AI HPC companies. So companies with large amounts of new high quality data centers are going to attract these large hyperscalers. So for this main reason, I really highlight Iron and Riot here because they've got such large power capacity. So if we flip over to our Bitcoin miner comparison chart here, sorry, I actually have it down here. But basically, you'll see that Iris Energy and Riot, of all the miners up here, so of these ones left, Riot and Iris are the largest power providers of all of them. They're also going to have the most immediate or most near-term available immediate power, in my opinion. So they could present a very good opportunity. We did see, as mentioned in that video we watched at the start, Riot's actually exploring kind of diverting up to 600 megawatts of previously announced Bitcoin mining infrastructure to actually AI HPC. So we'll see kind of what they do from there. But obviously, Riot's getting a little bit of a bounce today with the other AI HPC related companies. Iris Energy, I think, from a fundamental perspective, is really good. They're amazing Bitcoin miner. They've done a great job at scaling. They do amazing job of growing their data center business, and then now they've kind of branched into AI. They've basically said they're not in a rush to sign an AI deal. They want to make sure that the value they're getting for their infrastructure is going to be more accretive than if they were to use it for Bitcoin mining. So Iris Energy has the lowest efficiency in the whole asset class, and they have the lowest cost to mine. So it's really going to be important that any deal they take, it has to be more accretive than if they were to just continue mining Bitcoin with that energy infrastructure. Otherwise, it just doesn't make sense. So we kind of see on that front, they have a little bit more leverage in terms of negotiating. Whereas we see companies like Riot, they have a higher cost to mine, lower efficiency. They might really benefit. They've kind of been lagging this cycle a lot. So the stock price and the investors, they probably haven't been the happiest. That being said, it's no one's fault really. Markets can stay irrational. These companies are they're bullish long term, I think. Each one is different, obviously. Hopefully, we see a Riot really start to kind of play some catch up for this cycle. And I think this might be the move that really takes them there, especially if they have hundreds of megawatts immediately available. That's really what took Cores to new highs. So Cores went from being bankrupt essentially in the bear market to being the golden child of the Bitcoin miners for 2024. So yeah, it's really interesting what some of this AI hype can do if it's properly timed and the right deals. We see here, obviously, smaller companies like Bit Digital and Hive, obviously, they don't have as large of an energy footprint. That being said, Hive is actually developing quite a big footprint right now, but it's not within the U.S. So the majority of it is in Paraguay and then Canada and Sweden. So it's not going to attract the same level of interest as some of the U.S. institutional investors looking to really invest within the United States. That being said, they've got the most current HPC revenue, and they're also one of the lower market caps of the miners. So from a fundamental valuation perspective, Bit Digital and Hive look way better than some of the other miners in my opinion. But that being said, they just don't garnish as much of the hype because they don't really they're not focused on that massive scale of the actual business. But Hive has addressed that as well. But that being said, we'll get into the strengths and weaknesses of all these different miners. Obviously, Hive and Bit Digital, very efficient. They focus on getting the best margins they can. As a small miner too and an experienced miner, you really want to ensure consistent efficiency and profitability. I think that should be first and foremost. Companies that might just be growing as fast as possible but taking on excessive risk to grow at that rate. It actually has bit companies in the butt in the past. So in the prior bear market, a lot of companies over risk themselves during the bull market, and they actually it bit them in the butt. They maybe had to go into bankruptcy. Maybe they had to sell some of their assets at a loss, that kind of thing. So really want to see companies focusing on efficiency and profitability. That being said, too, there's current revenues that need to be taken into account. So we see Bit Digital signed LOIs for lots of their current upcoming capacity, and Hive also recently executed that purchase order we talked about. So expect more AI HPC advancements coming from them. Kind of getting down to comparing miners from a fundamental valuation perspective. So this is just looking at them as Bitcoin miners, obviously measuring them on a hash rate basis. So this is just the hybrid miners. I do have this document here that tracks all the miners that I do follow, as well as lots of different information there. I'll have that linked as well, access for you as well. But we can see here, so I've got all our hybrid miners marked here in the light orange. So kind of just looking over here, you obviously see all the hybrid miners have done a very good job in their efficiency scores. That being said, in their production consistency scores, they're kind of lacking a little bit, middle of the pack or lower of the pack. It really kind of shows you the companies that are expanding into HPC AI. It does affect some of the efficiency of the Bitcoin mining business because you're not 100% focused on that business. So sorry about that. Companies like Mara and Clean Spark here, they're 100% focused on that business there, on consistently kind of increasing the amount of Bitcoin mined as well as doing it very efficiently. Whereas with some of the AI hybrid miners, you see the efficiency is really good, like great efficiency scores across the board, but just kind of lacking in that production side. But that being said, it's kind of expected as they're diverting energy to AI. And if the revenues, again, as I said, if the revenues make sense going forward, then I see no problem in diverting energy. It's all about the bottom line at the end of the day. And I don't see anything wrong with the hybrid strategy versus the pure form strategy. They're just two different strategies, two different goals. I think there's room in the world for both. Obviously, AI and Bitcoin can coexist. And then we see here network share. So obviously their network share of the hash rate. So obviously looking from a mining perspective here, we obviously see Riot and Iris Energy kind of the notable winners here in terms of sheer hash rate size, network share. Iris's efficiency is a lot better here. So just notice kind of the efficiency. It is important to, in my opinion, to also consider the Bitcoin mining efficiency because it really shows you that company's been able to scale their efficiency so well. So you would think that the same expertise can actually transfer into different aspects of computing and data center operating. So a company that's able to really efficiently manage and scale their Bitcoin mining business, you'd hope that they'd kind of be able to transfer some of those skills and have it applied to the AI business as well. But yeah, looking here, Riot's a little bit less efficient. Core is a little bit less efficient as well. Then we see Iris Energy, Wolf, and Cypher, similar efficiency. But Hut and BTBT quite high and efficient over here in terms of their joules per terahash. Bitfarms and Hive kind of middle of the pack with Riot. Obviously through here we see pretty green across the board. So apart from Hut and Core Scientific, all the hybrid miners have done a really good job of the trailing 12-month efficiency of their mining business. And then we see here mining uptime. So again, uptime drastically affected for Core Scientific and Bit Digital because they've been transitioning infrastructure to that AI HPC. And then we also see here the Bitcoin HODL. So the amount of Bitcoin that the company has on its balance sheet, the obvious two standing out here are Riot and Hut. Substantial amounts of liquidity. That's like $1.8 billion in Bitcoin and over $1 billion in Bitcoin for Hut. So substantial liquidity to their market cap, very enticing. And then also Hive. Hive has a good liquidity to market cap as well. And Bit Digital also has a very good liquidity to market cap. We'll get into that as well, but also recognizing Cypher's got a bit of a hodl here, as well as Bitfarms. Wolf, Iris Energy, and Cores, no hodl there. So actually, Cores does have a bit of a hodl now. They've been holding, I think they have about 500 Bitcoin on their balance sheet or in their wallet right now. We're not sure if they're actually going to keep holding that, or I think management has alluded to potentially employing a bit of a hodl strategy again. But they have previously been selling their Bitcoin as they mine it. So we'll see what they do in the next production update. But if they have switched to a HODL strategy, it will be very interesting to kind of note and then see if they did actually add some of that Bitcoin on the balance sheet. We see here their energy under management, so just kind of ranked on a scale of like a large scale miner. So the current energy, Riot's just way ahead of everyone else here at 1160 megawatts energized, and they've got a 1760 megawatt pipeline. So that's that 600 megawatts that they're talking about that they have available right now. They're currently finishing that build out. It was initially for Bitcoin mining, but we'll see if they do end up, at least some of it, kind of transitioning to AI compute. I would kind of expect that going forward. We see Cores with 400 megawatts active. They're aiming for they have a 1.2 gigawatt pipeline. So we'll follow that. Iris Energy, 510 megawatts active, a 2.3 gigawatt pipeline. Wolf here, 195 megawatts active with a 500 megawatt pipeline. Hive, 128, 430 pipeline. Bitfarms, 324 to 755. Cypher, a huge pipeline here, 2.6 gigawatts, and Hut, a 1.3 gigawatt pipeline, and then Bit Digital, 288 megawatt pipeline. So you can see, even though even some of the smaller miners here, like scaling from 50 to almost 300 and from 130 to 430 megawatts, that's really impressive scaling. That's going to bring them up to the size of the current operating capacity of Core Scientific and Iris Energy. So it kind of shows you, despite the fact they don't have the necessary infrastructure yet, they are working towards scaling to that goal, and they will have that infrastructure in the future. And we might look for similar deals, kind of what we've seen here with Core Scientific, where we see them come in and really take advantage of the available energy capacity, as well as looking at the potential for that larger pipeline and more growth. And we kind of see here the prior year's hash rate growth. So Riot was able to grow 148%. Core Scientific, they they went down because again they're transitioning from Bitcoin mining to AI, so they're taking miners offline, replacing them with GPUs. So minus 14% in their hash rate. Iris Energy here, huge growth, 482% growth in their hash rate. Wolf 22% growth, Hive 25% growth. Bitfarms 97% growth, Cipher 88%, and then Hut and Bit Digital both just missing their, or not missing, sorry, just negative growth for their hash rate for the year. Just watching that going forward. But again, because they're hybrid miners, we need to factor in those revenues that we talked about above. And then we see here prior year target met. So obviously this is important. I like to see companies that execute on their growth strategies. Obviously we see here Riot and Cores missed their targets. We see Iris Energy exceeded their targets. We see here Wolf missed its target. And then we obviously see here Hive met its target. Right here Bitfarms missed its target. Cipher met its target. And then Bit Digital, or sorry, Bit Hut missed its target, and then Bit Digital didn't actually provide a year-end target for their hash rate, so don't have that data there. But we see just the implied growth also to their targeted hash rates here. Obviously, we see Hive here, and we see Cipher and Hut kind of targeting the most aggressive growth for them across or for the next year. So following them going forward. And then I've got revenue estimates here as well, obviously. So for Riot, we've got $769 million estimated revenue for 2025. Core Scientific, $639 estimated. Iris Energy, $539 million estimated revenue. Kind of moving across the board, obviously, we do see here. So the actual revenue amount isn't necessarily important. That being said, I just kind of ranked it based on a large scale producer. So anything over $500 million of revenue for the year kind of got you in the green. Anything, above kind of or between about 200 and 400 million has got you in the yellow. And then these are just the small scale ones. So red doesn't necessarily mean bad. It just means they're a smaller operator currently. That being said, we'll take a look at the 2025 revenue divided by market cap. So that gives you a good idea of kind of the relative valuations against each other in terms of their revenue divided by their overall market cap. So you can kind of see here, we obviously see that Hive, Bitfarms, and Bit Digital kind of rank the highest in terms of revenue divided by their market cap, or potential revenue revenue divided by their market cap. And then kind of everyone else in the middle of the pack here across the board. So yeah, seeing Hive, Bitfarms, and BTBT, so the smaller miners actually being undervalued a little bit more in terms of their revenue. Looking at their non-Bitcoin mining yearly revenue, we see here Core Scientific has 15.8 mil, Iris Energy 15.9, Hive has 9 mil, and Hut had 3.4 mil. And then we see Bit Digital here blowing everyone out of the water at 47 million.1 of revenue, or non-Bitcoin mining revenue in 2024. So yeah, really small cap company here, producing a lot more than some of the larger companies. That being said, these companies have larger future revenues kind of signed with some of their deals. So we'll just follow that going forward. But yeah, I do like Bit Digital, really good for the size of market cap, kind of what they hold as well as their revenues. Kind of here if they're pure form or a hybrid Bitcoin miner, if they signed a deal or not. So we've kind of gone through that. And then getting into the share price metrics, obviously we have the market caps. So large caps here above kind of $3 billion. Kind of anything around $1.5 billion is going to be our mid caps. And then our small cap stocks here kind of, sub $1 billion. Then we look at our enterprise value. So obviously, if we can see an enterprise value higher than the market cap, it just means you're getting more value than the actual price of the asset itself, kind of in the value you're getting in the business. So we see here Core Scientific, Cipher, and Hut all offering that significant kind of over 1.0 enterprise value to market cap. And then obviously the other ones are looking very close, so they're all really good. Hive is actually supposed to be green there, so excuse that error on my part. But obviously see share price, outstanding shares. We want to see less outstanding shares, just means less historical dilution. Their Bitcoin HODL value, so obviously Riot here's got almost $1.9 billion. Hive's got almost 300 million, etc., etc. So what I also want to show you here is cash and equivalents. And then we take our cash and equivalents and our Bitcoin HODL value, And then we go into our liquidity to market cap ratio, looking at our liquidity as a percentage of the overall market cap. The higher the better. It just means you're getting more value in the liquid assets of the company. So like Bitcoin and cash or Ethereum, that kind of thing. So obviously Hive, a major standout here at 74%, really more than anyone else in the space. So that's really good. That's kind of one of the reasons I really liked Hive. I also did a deep dive on them as well, so you're welcome to go check that out. But I do consider them to be quite undervalued from a fundamental perspective, given the fact that some of these valuation ratios are kind of pretty attractive, as well as the amount of value you actually get in the liquid assets. So as a result, it just values their actual mining business on such a discount compared to peers. So looking here, obviously across the board, the current ratio, so that's your ability to kind of pay off short-term liabilities and debts with your current liquidity position. Obviously, the bigger, the better. So everyone's pretty well capitalized to kind of pay off their debts if need be. That being said, kind of Hut, Core Scientific, and Wolf here, they're kind of just bottom of the pack again. Coors and Wolf don't have the Bitcoin or cash on their balance sheet as much as some of their other peers, so that current ratio is just not going to be as high. Price to book ratio, we do see here, obviously, Riot, Hive, and Bitfarms looking pretty good from a, Bitfarms looking pretty good from that price to book ratio. And then we've got from a debt to equity ratio, we've got Riot, we've got Iris Energy, we've got Wolf. So Hive a little bit more here, and then we've got BTBT looking pretty good from that debt to equity ratio as well. Looking at our EV value divided by revenue gives us this kind of metric to just gauge, again, relative valuation against peers. Obviously, the lower the better. So we're seeing Hive, Bitfarms, and BTBT, again, coming in bottom of the pack, presenting that relative undervaluation against peers. You can kind of see the two are the companies that are valued a little bit higher, except for Coors. We saw Wolf here, and we saw Hut being valued a lot higher than some of the other peers. So still just watching that going forward. Then we've got EV divided by hash rate. So this is just the value of the enterprise divided by the sheer amount of hash rate they have. Again, the lower number just means a cheaper relative valuation. So we've got Riot here, kind of middle of the pack. We've got Core Scientific, kind of a little bit lower. We've got Iris Energy, kind of getting in that top tier. And then we've got Wolf here. I keep forgetting Wolf, Hive, Bitfarms. So we got Wolf here. We've got Hive and Bitfarms top of the pack. We've got Cypher right in the middle, and then we've got Hut and Bit Digital. That EV to hash rate just a little bit higher. So you do see the major HPC providers currently are the ones with that higher EV to hash rate valuation. So it shows you kind of Riot here as well as Iris Energy. They haven't really factored in that potential hype. So just following that going forward, and then market cap divided by the exahash minus their HODL. It's just taking their market cap, subtracting the amount of liquidity they're held on their balance sheet, and dividing it by their exahash just gives us how they're valued relative to their peers. Obviously, the big standout here is going to be Hive at $17. So you can see the next cheapest miner is Bitfarms here, being valued at 55 million per exahash. So huge undervaluation by Hive. Even to get to the next lowest, that's a 3 times valuation. And even again, as we see some of these other AI related miners that actually sign deals, look at that valuation. That's like 10 times what Hive is being valued at right now. Even just despite all the bullish fundamental metrics that I've gone over. We got our reported cost to mine per coin, our 20-24% dilution. So obviously we want to see less dilution if it was accretive growth. So that should be red. Actually, no, I put that green because Core Scientific actually did have accretive share price growth. They didn't have accretive hash rate growth, but as an AI miner, that's okay. We won't get too hung up on that. Their growth was accretive to their share price, so great job from them. Whereas other miners, they were still, wasn't necessarily accretive to share price in certain cases, but as long as it's accretive to the fundamental growth of the company, I do believe the valuations can remain irrational for a long time. That's why I focus on the fundamentals, and I'm just patient. So obviously we see here pretty accretive growth across the space, but not from Hive, not from Hut, and not from Bit Digital. So we also see institutional ownership. Core Scientific, massive institutional ownership here. Hut, massive institutional ownership. And then we also see Iris or Wolf with pretty high institutional ownership, and Riot at 40%. So those are the top ones. Would like to see Iris Energy and Bit Digital's institutional ownership start to climb, as well as Hive as well. I'd like to see them. Again, they're not based in the U.S., so that might be affecting kind of some of their U.S. institutional ownership here. And then analyst price target average. So I just have this yellow or green depending on the price performance if you were to go from the current price to the target. So obviously we see here that Iris Energy, we've got Hive, and we've got we've got Bitfarms, as well as Bit Digital. They're kind of, if they were to hit their analyst targets, that's going to be the most upside from the current price. And then the rest are all kind of similar from there. So just kind of visualizing the potential growth in share price to the analyst targets. Moving on, so we see how does AI HPC benefit Bitcoin miners. So this is a quick pros and cons list. I'll just go over this, touch on it as fast as I can. We'll try to wrap this video up. I know they're long, but there is a lot of information to cover with these miners. There's a lot of different metrics and a lot of different things, headlines, news we need to pay attention to. But obviously the pros allows for diversification of revenue, hedging for downside within the Bitcoin crypto mining market. So if there's a bear market and 100% of your revenue comes from Bitcoin mining, your revenues are going to be really affected for that time being. Whereas if you're able to maintain a contract of steady income with AI HPC, you're able to offset some of that volatility with those steady margins. It also opens to a more diverse customer base. You have increased liquidity and market presence, so signing these significant deals with large players brings institutional eyes onto these stocks. They're very low cap stocks in relation to most traditional assets. So a lot of companies are probably don't even know some of these miners exist. So if we can increase the overall awareness of the asset class, we can also bring that institutional eye onto the miners, attract more liquidity, and hopefully kind of really bring a new level of investors to this space. We see their large construction timeline advantage. We talked about that. They've already been developing new data centers, so they have that advantage over those who are just starting to invest now. The relative undervaluation versus traditional data centers up to 90%. At such low market caps, these large AI hyperscalers can secure substantial amounts of energy at below market price, even if they're paying a premium on those assets. So really enticing for these companies to kind of get into bed with the miners. We do see here AI compute, therefore data center demand will only increase with time, cannot be serviced with traditional legacy data centers. So building out brand new facilities that can be tailored to specific technological requirements will have a massive competitive advantage. And then we're seeing hundreds of billions of dollars, soon to be likely trillions of dollars, to continue flowing into this AI infrastructure as the AI race continues. So I talked about this being like the Sputnik moment, or the international space race that we went in kind of back in the 80s, 90s. So this is just the AI race. Again, it's going to be all the nation states really trying to push for AI adoption within their jurisdictions, investing hundreds of billions, if not trillions of dollars. So these miners just being such low market cap, all they need is a tiny portion of that capital to flow into them to really have a meaningful effect. That's kind of also the selling point on Bitcoin. Basically, when you think of Bitcoin on the grand scale, it's so small in terms of market cap compared to traditional finance and other assets that, again, we just need to capture a very small percentage and it can have a very meaningful effect. So by positioning ourselves in these undervalued assets that are basically, we're expecting them to continue growing and scaling with time. We will just position ourselves in advance, and then we wait patiently for the valuations to realize, and then we are able to, realize the profits. We'll get into the cons quickly. So diverting energy from potential mining activities lowers their market share and overall rewards in the mining business. Again, that's not necessarily bearish if they're earning solid revenues from the AI HPC front, but yeah, it does divert energy from there. It also kind of pulls away from their focus as Bitcoin miners. So you might start to see little inefficiencies or potential inefficiencies across some of these hybrid miners as they're trying to effectively maximize their returns on both sides of the business. Obviously, complexity is a bit of an issue here. It requires different management skill set than Bitcoin mining, more involved management, and again, they're going to have to ensure a bunch of different contractual obligations with their partners. So that's kind of something you don't have in terms of Bitcoin mining. Basically, the Bitcoin miners, they just decide if it's profitable or not to mine Bitcoin and whether they turn their rigs on or off. So it's very simple in terms of Bitcoin mining. That's why some of the pure form miners have stuck with that strategy. They'd rather just do one thing and do it right. That being said, it's a different strategy. It's not necessarily wrong. I think, again, there's room for all of these companies in the market. So just going forward, obviously resource allocation, balancing resources between the two revenue streams may present more difficulty, especially as you get into more in-depth partnerships where some of these companies kind of have meaningful stakes in the company. They might have more say in terms of the general direction or usage of assets or infrastructure. So yeah, we'll see kind of how they allocate their resources going forward. But again, may have to reduce or may have to go through some balancing events there. We'll see. Capital expenditure. So building out AI, especially if you're building tier 3 data centers, it can require up to 2 times the capex that tier 2 data centers require to build. So obviously it requires substantial capex, more than the traditional Bitcoin mining data centers. You can build Bitcoin mining data centers very advanced, or you can build them pretty bare bones. We've seen all kinds of different designs, from shipping container data centers mining to just huge multi-scale, like multi-gigawatt facilities like Riot, like Iris Energy, that kind of thing. So we'll see going forward. Obviously, again, though, just more capital expenditure required. That being said, a lot, like in Core Scientific in their case, a lot of that cost was actually covered by CoreWeave, the client. So hopefully see more deals like that going forward. And we see market risks as seen during the last weeks in that broad AI-wide market dump. There's additional risks surrounding competition and technological depreciation obsolescence. I mean, that is also that's a realization of Bitcoin mining as well. Technology does depreciate, and it does go obsolete over time. So it is another risk in AI mining or AI HPC. So also jurisdictional regulatory uncertainty. Within the states, pretty safe, I think, or is really a big push for AI and data center development. That being said, I can't speak for other jurisdictions like in South America, Europe, Asia, that kind of thing. So again, that just is always something we have to keep in the back of our minds. Obviously, building data centers is going to require the usage of energy, and a lot of people are against the build out of energy facilities. Obviously require specific technological infrastructures, so racks, cooling systems, servers, chips. It's not the same as a Bitcoin miner. It's not a plug and play type deal. It's not like they can just unplug their Bitcoin miners and plug AI chips right in and then just start earning revenue in AI. That's not how it works. So we saw in Core Scientific, they actually did have to transition a lot of their infrastructure. So that's pulling the AI or pulling the miners off the shelves, kind of redesigning those shelves and racks to suit AI chips, and then bringing them back online. So it can be a lengthy process, and it can affect revenues in the near term. And then we see the risk of chasing hype. So like with anything, AI kind of did seem like a bit of a, I don't want to say bubble, because we can all say the bubble can get as big as it wants to. That being said, I think AI is going to be huge going forward, but just that massive sell-off we saw in markets due to a tiny bit of FUD was like pretty indicative of the fact that maybe things are a little overextended. Again, I talked about a lot of companies kind of running to these crazy valuations, but that being said, who's to really say when that thing can stop? Well, and that's kind of why I like the Bitcoin miners in this space, because they still offer that undervaluation. I mean, I've been trying to look at different AI-related tech stocks for the longest time now, and every chart just looks insane and kind of hard for me to buy into. Like I don't want to be buying into something that's already in price discovery. But that being said, so the Bitcoin miners kind of offer us that fundamental value that we like in Bitcoin and then the mining business, as well as that fundamental or kind of catalyst hype that we can get in AI or HPC. Just to sum things up, there's many reasons to be both bullish and cautiously optimistic regarding the hybrid miner's future. Similar to Bitcoin mining, not all the miners are equal. I do believe the ones I mentioned above will go on to do well this cycle. Some are going to outperform and some are going to underperform. Focusing on the ones with the strongest fundamentals and the most consistent history and the best growth outlook, we can mitigate some of the risk. At the current valuations, I do not see a ton of risk given their assets and infrastructure and revenue. But that being said, I'm also factoring the increased adoption of Bitcoin in a network. We do have to always be aware that there could be a broad market breakdown at any time. None of us have a crystal ball. We can't predict if there's a recession or anything like that. So no asset's going to be safe in that event. You need to be ready, and essentially that's why we invest based on the fundamentals. So we invest on the fundamentals because if the price action doesn't make sense, at least we know we're sitting on that solid company, on that solid foundation, and we're able to weather any temporary downside until we're able to realize the upside. So it's all just about risk management. It's highly volatile stocks, but again, you can't expect the volatility to the upside and not the downside. So it's a leveraged bet that we're taking on Bitcoin and AI by getting into these miners. And we also see by diversifying our miner portfolio to include some of the better fundamental hybrid miners, we can also capitalize on the continued boom of AI HPC. As data center capacity continues to become more scarce, hyperscalers will seek out the cheapest opportunities to acquire power. Many of these companies are capitalized to the tunes of hundreds of billions of dollars. So essentially, you see some of these companies, they could outright just buy all the miners and it would barely affect their balance sheet at the end of the day. So it really shows you how low some of these miners are being valued on a market perspective. So not only can we capture premium on the AI side of things, we can also continue to capture premium on that Bitcoin mining business, as well as the appreciation of Bitcoin as an asset. So the strongest miners I've seen in my years came from backgrounds as traditional data center operators or energy infrastructure operators. They weren't actually Bitcoin miners in themselves. The actual act of doing that isn't the hardest thing. It's really the management of the resources that makes or breaks a company. So I expect this trend to continue to flow into AI, as well as those who've consistently executed in the mining business will likely excel within their AI HPC hosting businesses. So that's it for today. I know it's a bit of a long video, a lot to cover. As always, none of this is financial advice or investment advice. These are my own opinions supplemented by publicly available data and figures. Always do your own research. So I hope you learned something new. I hope you maybe learned about a few new companies to look at, some that we might be watching going forward, looking for potential entries that might be able to capture some of that AI hype. And as I mentioned earlier, I will have this document linked below, as well as all my other supplemental educational resources for you to reference whenever you want. So thank you very much for watching, guys. If you learned something new, please like, share, subscribe, drop a comment if you have a chart request. Everything's appreciated. And I will see you guys in the next one. Bye.